Hello, everyone. It is Tuesday, March 26th, 2024, and this is the video for today. So let's go over the two picks from the last video. We had Amazon, a bull put spread, which I have still not gotten a fill on. As a reminder, this was the 72.50, 70, 172.50, 170 put credit spread expiring on the 12th. So we need a bit of a pullback to here, probably to the 8 EMA. But we still haven't gotten that filled, so I gave another trade in the meantime, which was APA. So let's look at this trade. You'll notice this bearish engulfing candle right away. And I said, hey, let's wait for a good entry point for this trade. Here is how it looked early in the day. Stock had a pretty decent retracement, and we had a nice entry point over here, right around 430. So I don't think I outlined any profit target for the trade, but because we had two things. One, we were making lower lows. The market had not found support yet. And two, we're an energy stock that's pretty choppy. We'd want to set passive profits at the high of the day. So there's an opportunity to make money here. Now, if you didn't do that, I still would not panic because you have the 200 SMA, the 100 SMA as your stop right here. Now, this bearish engulfing candle, it's not great. I'll tell you that. It's not great. So wait for this to hold. If it breaks, you're out of the trade. And if we go back up, we want to see a strong move back up that eats away at this candle pretty quickly in 1 or 3 bars. If we get that, then you can consider taking profits at this high right here, which seems to be a point of resistance. If we blow through that, that's great. You can stick with the trade and you can stick with the original target at January 4th. But this bar was not what we wanted. We knew that this is a choppy stock and you don't want to stay too long in it. So APA, I'm going to categorize as, let's say you need to do a half win or a half open. So I am going to log that as such. Where is my fix? All right. All right. So let's look at some of the market information for today. So longer term bias here, I am a 2 out of 3 bullish. My rating goes from -3 to 3. So I am a 2 overall on the longer term bias. We notice that the strong move has been weakening a little bit. The momentum has been fading. We're going a little bit more sideways, a little more range bound this month, which makes trading much more difficult. On a shorter term time frame, past couple days we're slightly bearish. We're a -1. And let's look at this on an M15 time frame. After we gapped up, we had a pretty weak pullback and we're testing the bid over here. Last couple days on the 22nd and the 25th were range bound. So we didn't really make that. We made the little early and then we kind of waffled around VWAP the entire day. Same deal on the 25th. We had a gap down. We filled in a good amount of the gap, or half the gap, and then we're just doing nothing for the rest of the day. And we got some weakness at the close. Today, gap up and then just choppy back and forth action. Market going anywhere, not going anywhere, and it's 100% range bound. So for shorter term swing traders, if the market is able to hold above this prior day high, I think we can get into we can take one or two swing trade longs over here, short-term swings, and I'm going to give a pick for that in a second. For day traders, there's not a lot of tailwind in your favor for day trading. So I've been working my day trading a lot recently. I feel like it is one of my, it's interesting. It used to be one of my stronger points, and then it's become one of my weaker points. And if you're ever wondering, oh man, why am I so good? Why am I so bad? It's because the market context is changing. It's hard to day trade these past couple of days because the price action has been so tight and so compressed. The market ranges are very, very tiny, and there's no momentum on either side. Stocks that look really good in the open can start to falter. So I'll give a great example of something like that here in KHC. KHC looked excellent in the morning. Oh, let's quickly check out the bearish explosion alert. That seems to be pretty nice. No, I don't love it though. See, there's a tail. We don't want any tail. All right. Wow, that is zooming down. But yeah, let's look at something like KHC, which was really nice right here in the open, and then had some strong selling and now has faltered. It's not really doing anything over here. So there's a tendency for stocks to not have this continuation. And this is good. This is a good time to err on the side of not trading, right? There's no trend. There's no high of the day. Not a lot of trades to make. So we look at more at tags. We look more at selling premium and finding great opportunities once the market provides us those opportunities. We're not going to get great opportunities every single day. But my goal is to see now that I've able to find great opportunities in great environments, can I find great opportunities in not so great environments? And there will be more few and far between, but they still exist. And I have to keep honing my craft in order to get them. So, bit of a tangent there. But we know that our price action is a little bit mildly bearish. And today I went from mildly bearish to neutral because we had a gap up. We're holding the gap up. The price action is still pretty neutral for the past couple of days, and I feel that the bid is starting to form. I mean, buyers have been here in this entire move, and the fact that we're able to hold this gap up means that sellers aren't very engaged. So I like how we've started to make a move higher, and hopefully I would like to see us at least close above VWAP today rather than close at the low of the day. It's not exactly what I'd like to see. We don't have to worry about any pullback now because we are in the pullback phase of the market trend. We're not too worried about any sort of climax because the buying hasn't started yet. We're also not worried about the bottom falling out because we're still in a very strong bullish trend. So, market internals for the day, market components. Tech had a pretty nice open in the morning. Retail was also doing quite well. Our flight to safety stocks were down. Our mega cap tech stocks were generally looking pretty good. So a lot of nice things on our market components. Our market context told us that we don't have to be overly worried at the moment. And the current day price action, the opening tells the hour, told us that, hey, we had an opportunity to make a trend day in the morning at around 10, right? If you look at this setup right here, okay, it's choppy action, so we're neutral, but if there's a chance to make a trend day, it's going to happen early in the day. Rejection, test to the low, rejection, test to the high, and once I saw this action here, about 90 minutes in, I said, all right, we're not going to be going anywhere. So even though I'm seeing this move here, yeah, we're going down. Sellers have some of the ball right now. There's really no control. I mean, do I think they're going to get breakthrough? It's unlikely until perhaps the end of the day when we get some more volume. But there's nothing really going on over here. So let's look at our current portfolio because I don't think we took a look at that in the last video. All right, so let's start with Lyft. So Lyft had a breakout on the 21st. And what did the market do on the 21st? Market going down, Lyft is moving up higher. So now what's happening? Well, the market pulled back here and Lyft is holding its gains. It's holding its own at the breakout level and it's not able to get through that. Let's take a look at this chart right here. So here's the market breakout. Came down here, test the level. Now it's poked back up and it's finding some support at this level. So that's exactly what we want to see. All right, our Wells Fargo long-term swing. So what I'm seeing with Wells Fargo is that we entered right here, March 12th, and the stock has gone sideways. So what's the market done over here? The market, since March 12th, has been moving up. Here's March 12th, pulled back a little bit, which we found good, and it didn't really rally up with the market on the 21st. So to me, Wells Fargo has lost its relative strength, right? It's really running out of time. We're compressing over here, and we're finding some support around this compression right here, but we're also finding some resistance at this compression. So what am I going to do? Well, my original bias was that we had a very strong trend going into Wells Fargo, and now that trend is not really happening. So the original premise for me entering the trade is no longer valid. My plan is now to exit Wells Fargo for a scratch or even a small win if I can around where I entered. So that's the plan for Wells Fargo. We have the earnings coming up, so I feel like there may be a strengthening of the bid into earnings. If it breaks out of compression, that's great. I'll take it. But right now, the original premise for me entering the trade is no longer valid. All right, our NVIDIA YouTube pick we can remove because that was a PDS. So I believe those are the only two positions that we have open as I'm checking my chart right now. And let's give some picks for today. So first pick I like is app. And I like doing pick up my notes here, the 419, the 6750 calls for about 790 right now. There's not a lot of premium in this because app does not have a lot of IV. Now, here's a condition. First, I want the market to close above the prior day high, right? That is important. So if the market's not able to do that, then I'm not as interested in taking any swing longs at the moment. But we know that our long-term market bias is bullish. Our D1 bias on app is very bullish. It's a 3. I mean, you can see his post-earnings breakout, slowly digesting the gains. We broke out of this candle, and now the story of the stock is starting to change. What started out as an okay trend has now gone into a much stronger trend. And you can see the slope of the 8 EMA rising up. We're getting a nice 45-degree angle over here. We do have some time flow earnings, and I think you could do this as a longer term swing, but we already have some longer term swings, so I don't want to be putting on too many longer term swings, maybe one or two at the most. So I would do a shorter term swing, and I would target a 1 ATR move. When we get some tailwind in the market and some tailwind in the stock, you can take some very nice gains in this position. So app is going to be my pick of the day today, and let's add that to our YouTube picks. Now, the other pick I like is Carvana. Now, the difference between app and Carvana is that app has a lot more option implied volatility, right? So here's the call ATM, right? 0.8. Let's look at app. Give it a second to load. Yep, app is 0.46, right? That's half as much. So when a stock with a high IV, we can take calls, but we have to pay extra premium for that. And the premium for the price and the delta that we want for these Carvana in the money calls is going to be a lot higher. We got to go pretty deep in the money. We got to pay a little bit more premium. So what I'm thinking instead is, because the premium is so high, I'm bullish on the stock. Let me take a bullish put spread on Carvana. So here is the bullish put spread I would do. I would take the 74, or probably take the 75, 74 bullish put spread for a 20-cent credit for $4.19. We have plenty of time before earnings. If the stock pulls back, we'll get our fill. And we could keep our bias on the stock intact. So that is our other pick, and I'm going to add that as well to our picks. So we'll have potentially 2 bullish put spreads on. We'll have some shorter term swings, and we have 1 or 2 longer term swings. So that is what we are managing right now. So 3.6. Let's put in app. Okay, so that is the trades for today. Those are the videos for today. We are going to take a look at the picks that we said today. We'll take a look at them tomorrow, and we will see what the market gives us for this week. Thanks everyone for watching, and I'll catch you all in the next video.